Good afternoon or good morning, depending on your time zone. Welcome to Sabancı Holding Virtual Financial Services Day. We have our Group CFO, Barış Oran, Financial Services Group President Haluk Dinçer from Sabancı Holding are present in today's events. We have also Aksigorta CEO Uğur Gülen, Aksigorta CFO Osman Akkoca, Avivası CEO Fırat Kuruca, and Avivası CFO Erkan Şahinler present as well. Today, we'll be discussing Turkish insurance markets, its dynamics, and Sabancı Holding's financial services business during the presentation. There will be a Q&A session at the end. I'm now leaving the floor to our CFO. Barış.
Thank you. Welcome once again to Sabancı Holding Virtual Financial Services Day. Let me take a few minutes of your time to talk briefly on Sabancı Holding. Throughout the years, Sabancı Group has succeeded in creating market leaders in Turkey's major industries such as financial services, energy, and industrials. These three business units represent 82% of our 35 billion NAV as of the second quarter. The group has maintained this leadership profitably by managing to increase its EBITDA by 19% per annum between 2014 and 2019, beating Turkey's average GDP growth and average annual inflation in this period. Group's strong EBITDA performance in the past 6 years continued in the second quarter as well, even when the impact of COVID-19 pandemic was at its peak. In the quarter, we managed to increase our total combined and non-bank combined EBITDA by 15% year-over-year and 5% year-over-year, respectively. Financial services segment once again remained as a key driver of our EBITDA growth by registering a tremendous 102% year-over-year growth in the quarter and bringing its share in the total combined EBITDA up to 7% compared to 4% in 2019 and 3% the year before. Putting customers at the center of its digital transformation, our financial services segment managed to differentiate itself and maintained sustainable growth over the years as the segment's combined EBITDA registered an eye-catching per annum growth of 38% between 2014 and 2019, doubling its share in group's combined non-bank EBITDA to 8% as of 2019. This profitable growth also reflected on Sabancı Group's dividend income as the share of financial services in Sabancı Holding's total dividend income reached to 28% in June 2020 compared to 19% the year before and mid-single digits in 2018. With improving profitability, financial services segment has been the major driver of group's ROE improvement. Financial services combined ROE has been continuously increasing since 2015 and reached 40.8% in the first half, once again showing the extent of improving profitability. This substantial improvement played a vital role in group's non-bank consolidated ROE improvement that has reached 13.3% in the first half, which once again remained above Turkey's 10-year average bond rates. Financial services has been and will continue to be a pillar of our group strategy. While maintaining organic growth, we will continue to explore new business areas in Sabancı Group's ecosystem, enabling us to deepen our digital transformation. I would like to now leave the floor to our Financial Services SPU leader, President Haluk Dinçer, to talk on Turkey's insurance market and its dynamic and Sabancı Holding's financial services business in more detail. He is also the architect of this tremendous success of growth and profitability. Haluk Bey.
Thank you, Barış Bey. I also would like to welcome you to the Financial Services Day of Sabancı Holding. We are pleased to be here with my colleagues at this virtual meeting. Today, I'll talk briefly about the potential we see in this market, what we've observed in this market, what we have achieved in the past 5 years, and what sort of a future outlook we have in place. I'll start with the potential. Turkey, as you very well know, is the 19th largest economy in the world, whereas we are ranked as number 30 in non-life insurance and number 52 in life insurance. This obviously shows huge potential. On the penetration side, which is measured as premium production versus GDP, over GDP, We are at 1.2% for non-life, which is much, much lower than the world's average of 3.9%. On the life side, we are at 0.2% penetration when the world's average is 3.3%. On the pension side, which is relatively young sector in Turkey, the assets under management over GDP is only 3% when OECD's average is 60%. Next slide, please. Turkey in Europe is the 8th largest economy, whereas we are ranked as 15th in the non-life gross written production with only $9 billion in 2019. As you see, our normal place should be somewhere between Switzerland and Belgium in the next decade or so, doubling the premium in dollar terms in the next decade. Next slide, please. The next slide shows us the same figures in percentage terms. Turkish penetration, as I said earlier, is 1.2% when European average is at 3%. Again, we are at the bottom of the graph. Next slide, please. On the life side, the picture is no different. Again, the penetration is only 0.2%, whereas European average is 4.6%. Again, this shows the huge potential. Next slide, please. On the pension side, we are even at the bottom of the graph this time with 3% penetration only, assets under management over GDP ratio, when we see countries such as Poland at 10% level. Next slide, please. Now, about what we have achieved in the past 5 years, although the figures are quite low, we can easily say that Turkish market, insurance market, both on life side, on non-life side, and pension side, we can easily say that we have come a long way. In the past 5 years, our CAGR growth has been 18% in average in the non-life side, where we have 39 players. It's quite fragmented, where top 10 accounts for 65% of the market. And 69% of equity is owned by foreign companies. On the pension side, the last 5 years, we have seen a growth of 26% in assets under management. As you very well know, this is fully supported and incentivized by the government with 25% contribution of the state for each saving. There are 17 players in total. It's more concentrated than non-life. There are top 4 accounts for 69% of total assets under management. And again, it's dominated by foreign players with 58% of equity. There is a high participant number with 7 million in the voluntary pension system, in addition 5 to 6 million in the automatic enrollment. When it comes to life insurance sector, the growth rate has been 32% per annum. And this year, thanks to our new products, our growth rate in the first half has been 91% when the sector is only growing by 60%. As I said, we've come a long way in terms of growth in the past 5 years. Now, when we look at the future of the insurance sector, next slide, please, there are key drivers that can take the sector forward. The first one is SEDDK in Turkish, Insurance Regulation and Supervision Agency, that we have been waiting for a long time. This is the regulatory body for the insurance sector, obviously, that corresponds to BDDK in the banking sector. We were expecting ambiguity-free legislation. We have high expectation of this new body, and we expect stronger regulation. We see, especially on the complementary health insurance, we are expecting new regulations, and we expect this to expand the market. We expect growth of technology. We expect to see insurtechs, parametrics, and more digitalization in all aspects. Next slide, please. When it comes to figures for the next 5 years, on the non-life side, we are expecting a growth of 14% in average. It's quite high again. And Aksigorta plans at 18% per annum growth for the next 5 years and targeting a market share of 10% while maintaining a high return on equity as today. Pension sector assets under management growth expectancy is over 20% per annum. And life sector gross written premium expectancy, the growth rate again is expected to grow about 20% per annum. As you know, we are the leaders in assets under management, and we expect to maintain, we target to maintain our leadership position there. Again, our return on equity target is over 30% as today. Next slide, please. As Barış Bey explained earlier, we are mainly will expect to continue or grow organically, but we're also open to exploring to new opportunities and we expect to see some consolidation in the coming years. So we will be studying all of them. And when it comes to adjacencies to explore, we are already working very closely with the insurtechs that are quite successful in the market. The growth, we have over 3,000 agencies, 900 of them have joined us in the past 2 years, and 22% of our first half production is coming from those new agencies, and the share of new products has reached 11% in 2019. And the CAGR of Aksigorta for the 2016-2019 period is spectacular, it's 33% per annum. Now, when it comes to Avivasa launched a very successful credit-linked life product last year, in mid last year, and so far we've generated over 700 million Turkish lira premium, and share in total premium has reached 40% with this new product. Next slide, please. Okay, we have a very strong partnership with Akbank for over a decade now, but has been quite successfully growing in the past decade, I should say, year after year, along with the development of bank insurance in the country. Our partnership with Akbank has been growing quite rapidly. Next slide, please. And digitalization. There's a long list of projects that are completed, that are in place, that are state-of-the-art, and there are many in progress. And I should say both of our companies, Aksigorta and Avivasa, are both leaders in terms of digitalization in the insurance sector. Thank you very much. And I pass the word to Uğur Bey now.
Okay. Thank you, Haluk Bey. Welcome to Sabancı Holding Financial Services Day. And today I'm going to give some brief information regarding market trends, Aksigorta and the Aksigorta financials and the X+5 guidance. Next slide, please. In the first slide, the market growth in the last 5 years, CAGR reached to 18% level. And currently this year, at the end of 2020, we are expecting to reach 60 billion TL premium growth in the non-life market. When we look at the line of business breakdown, there are two major trends in that line of business breakdown. One of them is after 2016, the contribution of NTPL dropped from 36% to 28%. The major reason of it, establishing the risky vehicle pools and the tarification. On the other hand, the importance of health has been increasing in society. So health premium share increased from 10% to 13% in the last 5 years. When we come to the channel breakdown, due to the fact that the major seller of the MTPL are agencies, so decrease in the MTPL contribution also affected agencies contribution as well, and agencies contribution dropped 70% to 62%. On the other hand, corporate channel, including brokers, gained some market share in the channel breakdown. Banking has been tried to keep its 14 to 15% contribution in the market growth. Next slide, please. Of course, there are a lot of trends in the market. These trends has not only been affected insurance industry, and these trends influencing all the industries. The first major trend which we are going to talk more on the future is the increased focus on the healthcare industry. Of course, usage of data and changing customer preferences, digitalization are the trends which impact both insurance and the rest of the industries. I'm going to a little bit give detailed information regarding integration of insurance ecosystem. Haluk Bey in his speech mentioned how Aksigorta and Aviva has been using this Sabancı ecosystem. But with those trends, particularly the digitalization and the changing customer behavior, we believe that insurance products will be bundled to other transactions of the customer. And at that point, Aksigorta has recently started to establish first telecom insurance in Turkey with Vodafone company. On other key trends are the new categories of insurance, because with the digitalization and remote working, risks has been changing. Cyber security, internet theft, kinds of new risk has emerged, and insurance industry will provide products for those new risk in the market. Next slide, please. Haluk Bey mentioned in his presentation on the low penetration. I will give a little bit more detail product by product. You know, MTPL is the motor third party liability, is the compulsory product, and the penetration rate reached to 81%. So there's still 20% under penetrated market even in MTPL. On the MOD side, the penetration rate is 29%. Although 29 would be a little bit smaller, but when we look at the European countries in the MOD, 30 to 40% penetration is expected. So Turkey's MOD penetration is not bad. As new car sales increases, those penetration increases as well. On the TCIP, another compulsory product like MTPL, but still, since even though it's compulsory, the penetration rate reached to the 56%. There is a positive trend in that penetration rate, but still there is a huge untapped, unpenetrated market there. And the last one is the health. Only the health insurance owned by 4% of the society. On the other hand, the major reason of it, of course, state is the major payer on the health insurance. 80% of the health spendings has been done by state, 16% has been done by individual out of pocket, and 4% has been done by health insurance. Most probably, we are going to see an accelerated trend in the health insurance on the coming period. Next slide, please. When we look at the market growth and profitability figures, non-motor and health products are leading both growth and profitability in the market in the last 5 years. The most growing line of business is the health with 18% growth rate. On the profitability side, MTPL underwriting margin is in the last 5 years, in the next 3 years will be 0 to -10%. But as you know, MTPL is a product who brings a lot of asset under management to companies. Just looking at the underwriting margin would not mean anything. You have to add at least 1.5 times of the annual interest rates to the underwriting margin in order to calculate the technical margin on that line of business. MOD, non-motor and health historically has some positive underwriting margin. As I said before, health and the non-motor has the highest profitability margins. Next slide, please. Of course, COVID has impacted a lot of issues on the non-life insurance industry. One of the major impacts on the cash flows, related with that risk in Aksigorta, we don't see too much risk because 63% of our receivables have been collateralized by credit cards, 5% receivables collected via bank accounts, and 10% receivables as other collaterals. our bad debt ratio is less than 0.02% level. Of course, asset devaluation is one of the impact of the COVID to non-life balance sheet. Again, thanks to our well-managed asset under management and the investment portfolio, our equity is limited with only 6% of the total asset under management. And business continuity was another impact. And again, thanks to Aksigorta's best of breed investment on the technologies, in the first day to up to now, team has been working remotely and very, very efficiently. On the health side, due to the COVID, there would be some problem, but thanks to our full reinsurance agreement done with another health insurance company. Of course, economic slowdown definitely hurt the growth rate of the insurance industry, but we don't see any big problem on the renewable side. Of course, there are some positive effect of the COVID as well, because in May and April and May period, the claim frequencies dropped enormously. That may lead to quite profitable underwriting result on the balance sheet. But after the normalization, the lack of airplane travel, the mobility has been increased on the roads. So the claim frequencies has started to increase gradually. Next slide, please. Of course, there are risks and opportunities in front of us. I will not go over detail, but economic slowdown, COVID-related risks, and volatility and FX are the major risk in front of us. On the opportunity side, of course, increasing interest rates and of course, COVID has provided some efficient cost management to us are the major opportunities, as well as low insurance awareness and the under-penetrated market of Turkey. Next slide, please. Now come to Aksigorta. This is our strategy house. The Aksigorta has a very strong strategy formation process, and that strategy house has been reviewed twice in a year. And but our vision has not been changed for a long time. We make insurance experience easy, lean, and accessible by leveraging data and technology. Really, we are chasing for that vision in every aspect. We have some ambitions, targets. We put 3 major ambitions on the strategy house. One of them is the return on equity will be not less than 30%. But in the last few years, Aksigorta achieved much more higher return on equity figures. So indeed, we achieved that ambitions, and we are going to keep that performance in the future. Of course, our market cap, what we believe is very, very low. So we believe that we are going to reach Aksigorta market cap to at least $1 billion US. And today we have a 8%, around 8% market share, and on the coming period, one of the target is to increase our market share. We have four strategic choices. We are customer centric, we are accessible, we grow leveraging data and technology, and we are engaged and execution driven. This is the major four strategic choices Aksigorta has been done. And we put 5 priorities 3-4 years ago. Now when we look at those priorities, customer centricity, innovation, data analytics, digital and new technologies, really helped Aksigorta to cope with that pandemic crisis in that period. And what we in every Aksigorta employees has three major working values, and with that slogan, I lead myself, I lead others, and I lead my business. So self-development, driving result, and collaborations are the values of the Aksigorta employees. Next slide, please. In the last 5 years, although market CAGR is 18%, Aksigorta CAGR is 28%. So we have a 10% higher CAGR compared to market. Aksigorta line of business breakdown, as you know, before 2015, before that pool establishment, Aksigorta decided to decrease the market share on the MTPL, which was a loss-generating line of business. In the last 5 years, we strengthened our reserves and as well as improved a lot of data analytics tools to improve our pricing and the customer selection. So currently, at the end of 2019, even the half year result of 2020, Aksigorta is the almost single profitable company on the MTPL with around 10% market share. As you know, one of the maybe points we should mention, there is a decreasing trend on the health and the non-motor, but this is due to the high increase on the MTPL. On the channel breakdown, Aksigorta channel breakdown is very similar to industry's channel breakdown. We have some slightly lower bancassurance share and slightly higher corporate channel shares, which is historically is one of the assets of the Aksigorta. Next slide, please. If somebody told me that if you show only single slide, I would show that slide to investment society because that shows how Aksigorta is different than the market, both in terms of top line and the profitability. We are in the third position in the premium production. On the other hand, on the underwriting margins, Aksigorta is 3% higher underwriting margin. Market is 4% and Aksigorta is 7%. Underwriting results year-over-year growth reached to 76%. Although our market share, premium market share 8.3%, our underwriting result market share is 14.4%. So that's make the Aksigorta leader in the underwriting result part. On the financial income part, particularly in 2019, we performed better than the market, and market yield ratio 17.7%. Aksigorta achieved over 20% yield. Although our AUM is less than the major competitors due to our higher dividend outperformance, with lower asset under management, we are making a quite good financial yield. That's also Aksigorta leader in terms of financial yield. And I think the most important success of the Aksigorta is the G&A performance. Aksigorta G&A performance 3% better than the market. Indeed, 5 billion TL company with a 3%, 150 million TL value has been created by that efficiency. Almost half of our ROE has been come from our G&A efficiency. We have been working the same number of employees for a long time. Of course, the mix of the employees has been changed from most routine job, operational jobs to the more value-adding services. Of course, ROE is double of the market with 45% ROE comparing to 23% market share. These are the financial successes, but maybe non-financial successes would be much more important than financial successes. Aksigorta has been ranked in two successive years as the best place to work according to the Ion Hewitt. And now the engagement score is in the exceptional zone. Agency engagement NPS score is 51%, much more higher than the competitors. And customer NPS scores is 43% versus market average 33%. Both non-financial and non-financial part, Aksigorta is leading company in the market. Next slide, please. Some financial highlights. These are the SFRS figures. Our combined ratio compared the first half of the 2019 dropped from 99% to 86%. thanks to the COVID impact, claim frequency decreases in the second quarter. 7 or 8% combined ratio improvement is coming from that positive COVID impact. Net income increased from 168% and 258%. Year over year, there is a 54% increase. And underwriting results increased from 111 million TL to 294 million TL. Around 100 million TL underwriting results improvement came from COVID impact claim decrease. Next slide, please. As I said, ROE, even last year ROE 46% is high. This year ROE reached to eye-catching 56% level. Our assets reached to 4.8 billion TL, and our asset under management reached to 3 billion TL level at the half year results 2020. Please, next slide, please. Of course, non-life companies' revenues has been divided into two major sources. One of them underwriting result and the financial income. Depending on the economic conditions, these two income sources replace to each other. In 2018 and 19, in the high interest rate period, we have made quite an important financial income, but in 2020, this trend, financial income and the insurance income has been balanced out each other, and most probably in the mid-year performance, underwriting result surpassed the financial performance in the first half of 2020. Next slide, please. Of course, investment portfolio, as I said in the previous slide, is one of the major income source for a non-life company, for Aksigorta. Of course, depending on the economical developments, we have been changing our investment mix. The major trend, as you can see, at the end of December, we have a 66% TL deposit, now dropped to 37%. That drop has been compensated by more corporate bonds and the government bonds. In the first half, our yield is around 11.5%. Of course, after July increasing interest rate, most probably we are going to have a higher yield in the third quarter and in the fourth quarter of 2020. Next slide, please. Year-end guidance, we have given that year-end guidance in our investor meetings. In the gross written premium side, we say that we are going to grow 15 to 20% of higher than the prior year premium. On the net profit side, up to 10% growth as we can give as a guidance to investment society. Next slide, please. In the long-term objectives, Haluk Bey also mentioned, we are expecting some lower market growth rate compared to prior 5 years. We are waiting 14% market growth rate, and Aksigorta growth rate will be high, 4 to 5% higher than the market, and our underwriting margins will be higher than the market's underwriting margins. Of course, on the dividend payout policy, not less than 15% in line with our official policy can be taken as a dividends policy, and where we would like to keep our capital adequacy ratio at least 115%. Of course, dividend performance is one of the well-known point of the Aksigorta in the stock exchange market. Next slide, please. Why invest Aksigorta if you don't invest up to now? I think you haven't missed anything. Still, you can invest Aksigorta, although Aksigorta showed a great performance in the couple of years, but we know that there's a lot of room to go on the Aksigorta valuation. Of course, strong partnership with Sabancı and Ageas is one of the items there. And very high performance focused leadership team who are managing as an enterprise leader of each department, I think is one of the features of Aksigorta. Aksigorta is the superior distribution power, over 3,000 agents, over 100 brokers, and the strong Akbank channel and newly established telco assurance channel is the one of the major differentiating factor of Aksigorta. And the fourth one, world-class use of technology. Definitely, not only in Turkey, even in Europe, insurance companies, Aksigorta, the use of technology and implementation of technology in the processes is one of the leading power of Aksigorta. Of course, strong track record of the company is final points to invest in Aksigorta. So this is end of my presentation. I will be very happy to answer your question during the Q&A session. Now I would like to give the word to Mr. Fırat Kuruca, CEO of the Avivasa.
Thanks, Uğur. Hello, everyone. I would like to welcome you once again. As you know, Avivasa is active in two major markets. One is pensions, the other is life insurance. And I would like to share with you some trends as regards the both markets. So if we, next slide, please. All right, now the pension market generally is defined under three key parts. One is social security, pillar one, which Turkey had since a long time. The pillar three was launched in Turkey in 2003, almost 17 years ago. And this is defined as voluntary pensions. And auto-enrollment, which was recently launched in Turkey in 2017, forms pillar two. A complete pension system would require all three pillars to be equally strong. Turkey has introduced both pillar two and pillar three relatively recently, and therefore we have been registering significant growth rate, as we can see a bit later on. Next page, please. Now, the total pension market in terms of assets under management has reached around 155 billion TL as of August this year. And this is on the back of around 30% year-on-year assets under management growth throughout the last 10 years or so. And particularly in 2020, we are seeing a stronger growth rate of at about 38%, compensating more or less a bit depressed growth rate of the prior year. All in all, the pension market in Turkey has grown significantly, but still relatively small compared to more developed markets at about 3% of GDP, whereas in OECD, we are looking at around 60% of GDP on average for the pension fund. So we have a lot of room for growth. So next page, please. If you look at the 30% growth rate, actually, this has happened while we increased as a market the total number of participants to around 7 million as of 2018. But lately, the real growth started to come mainly from the assets under management per participant rather than new participants coming into the system. Now, 7 million participants is already a good number. Therefore, we are seeing a bit of a maturity over there. But in terms of total assets per customer, we have still way to go. at about 21,000 TL per participant in private pensions. We are nowhere near the numbers, ideal numbers required for a good pension outcome. Therefore, we have been seeing significant contribution coming from the assets per participant, and we are at a leading position in that regard, almost 160% of the market, I will say. So the next page, please. So the other market that we are active in is life insurance. This is a bit different from more developed markets, and because this is mostly around protection. Life protection insurance. Life savings has been a dormant market for almost 15 years. Therefore, it's really dominated by protection. And within protection, we see a 70% weight coming from credit life business, which is a bundled product to banking loans in Turkey, constituting around 70% of the total life business. Here we have seen around 23% CAGR since 2013, but recently we have seen an accelerated growth rate both in 2019 and 2020. In 2019, we had seen a sectoral growth of around 60% year on year in terms of written premiums, and this year it looks like another 60% is in the making. As of August this year, we are again seeing a 60 percentage points growth. So if you look at the markets that we are active in, we are looking at more than 50% growth rate potential lately in life, and more than 30% growth potential in terms of pensions. So we are in a relatively high potential market. And next page, please. Next page. So if we look at our position in those markets with a bit more detail, I would like to say that we are number one in terms of private pensions, considering only the private industry. I would say a recent amalgamation of the three state companies have put us head to head with as market leader, but we regard ourselves at around 19% market share as the leader. And within pensions, there is auto enrollment segment, which is really very important for future growth, given all the potential regulatory changes in the pension area. And there we have also a very strong position at number 2 with 16% market share. And this is the best position in terms of private companies. And in terms of life protection, we are looking, we can divide the market into two. One is standalone life, the other is credit linked. In the standalone life business, we have a market leading position at about 19 percentage points with around 40% year-on-year growth. And in terms of credit linked segment, we are seeing that we have a potential to improve our position. We are at number 7 with 5.2 percentage points, but with 190 percentage points or 90% growth year on year. So we have an accelerated, even more accelerated growth in credit linked business, and we have more potential to achieve in that market segment. Next slide. Now, in terms of our top business priorities, of course, business is about growing the top line and the bottom line, and we are looking at the top key 5 priorities. First off, we have already a very good market leadership position in pensions, and we want to maintain that at about 18-19 percentage points in terms of assets under management. And we have already a strong position in life market, but we want to improve to a more leading position in the market segment. These are the two top line objectives. But of course, this would require significant improvement in the customer value management, because in our business, which is long term, customer persistency is very important, and the most difficult part of our business is about the customer acquisition. So once we acquire the customer, how we extract more value from that customer by cross-selling, upselling, and persistency is going to be key. A key part of our growth is not only about new customers, it's also generating and improving the value of existing customers. And our age requires digital and analytics to be at the core of our business, which we have been investing over the last 3-4 years heavily, and we have started to see significant results in terms of data analytics and in terms of service quality that we provide to our customers via digital channels like the mobile app has been contributing to our business significantly, and we want to go on the same path in the foreseeable future as well. But to achieve all those priorities, we of course depend on our employees. We have around 1,400 employees, and we have a very strong company culture around performance, about customer sensitivity, around collaboration. Our employee engagement has been measured as 83% last year. Probably this year could be a bit higher. This 83% customer engagement is exemplary, and I think it has contributed to our success during this difficult pandemic times, where working from home requires significant engagement from the part of the employees. So we have really been a success as regards to pandemic management due to our culture. Next page, please. So in terms of the competitive advantage that we have in the market, I can say distribution, multi-distribution capability is the most important. We have significant presence in bank assurance. Direct sales force is the only kind of its own in the market. Agencies, in the agencies channel, we have built a #1 leading position in the market. In the corporate, including auto enrollment, we have a very strong presence, and we have up and coming digital channels that may account for future growth later on. Next page, please. So on the back of all those priorities and the stories that I have shared with you, our performance in the long term has been rather exemplary and sustainable. I would say we generally focus on the long-term value generation, while of course also generating significant short-term returns. So if we look at the growth numbers in terms of top line, in terms of pension, over 5 years, we have seen 26% CAGR. In life protection gross return premiums, we have seen more than 40% growth rate. Our expense ratio has improved from 55% to 43% as of last year. And the profitability has improved year on year by 41% CAGR on the IFRS basis and 86% CAGR for the local GAAP SFRS basis. So these are all pretty good growth numbers that have that shows there's a sustained growth potential in our business. And in terms of our return on equity, we are looking at in excess of 30 percentage points over the last 4 years, and we recently had around 35% ROE as of the half year. Here I would like to move on. Next page, please. If you look at the, let's say, profitability per category, in pensions, we have seen a significant growth on the top line, but this was a bit diluted down in terms of pensions contribution to our profitability. This is due to the fact that, the growth has come from, let's say, cheaper funds, sort of a business mix issue, but we see a strong growth potential in the future, just was the case in the past. So if we can move on. In terms of life protection, this is a more profitable area that we have been focusing more aggressively over the next page, please. Next page. In terms of life protection, we have been focusing more aggressively, and we have seen around 50% CAGR over the last 5 years and 91% growth year on year in terms of gross written premium in life protection. And in terms of technical profitability, we have seen around 41% year-on-year growth this year. So despite all the pandemic issues, we have seen significant growth in that business. So next page, please. And personal accident is a relatively business, but still a relatively small business, but still profitable. Well, this has been more affected by the pandemic situation, if you like, but still the long-term growth rate is there at about 12% CAGR, and going looking further, we have new projects that should improve the personal accident profitability and the growth. Next page, please. So if we look at overall our life protection and personal accident business, which is rather profitable, we had 3 key market segments that have been showing significant growth. One is credit-linked business, which constitutes around 44% of our business, that has grown by almost 180 percentage points compared to previous year. 60% growth in non-credit linked business produced via bank insurance, and 31% growth in non-bank insurance channels. So we have very high growth rates across different product lines and across different channels, and we will continue investing on this market as we see it more valuable and profitable. So if you look at the key profitability metrics, in terms of net profit, we have seen around 28% growth year on year since 2015. And we have reached around 240 million as of last year. Now, this year, the growth rate in the first half has been depressed at about 60% because of conjunctural issues and in line with our plans. Whereas we see the second half to be to have more potential for profitability, and we will probably see that in the coming quarters. If we look at beyond net profit, actually we see net profit is a function of both the financial income and insurance income, insurance underwriting income. And in terms of technical profit, we have seen around 32% growth this year alone. So this was diluted by relatively weak financial income performance and reduced to around 6% bottom line growth. But this 32% is a rather impactful figure for the rest of the year. The next page, please. And last but not least, actually, we also look at the overall long-term growth potential. This shows the evolution of our embedded value that comes from our existing customer base that we built over time. So we are seeing a consistent growth of about 12% in terms of our embedded value. So while we are generating short-term IFRS and SFRS growth, we are also focused on the growth of our customer portfolio value and embedded value, as can be seen in that slide. So this way I close my part and maybe ask Kerem for questions.
Any questions so far?
No, no questions so far.
Okay.
Very clear.
We have one question from Cenk Orçan. Can you please elaborate on possible legislative changes and new growth pillars in coming year in pension?
Okay, Fırat Bey, why don't you talk about what's the
Yes, of course.
what sort of a legislation you're expecting
Okay.
at Turkish Insurance Association, not just by yourself, but as a sector as a whole?
Yes.
Please.
So, as you might be aware, over the last 18 months or so, actually since the break of the economic, let's say, volatility at the end of 2018, there has been a couple of economic programs announced, and all of those included some reform on the pension. Recently, there was a lot of talk about severance payments being transferred into private pension systems, but lately we have heard some silence in that regard. Having said that, we know that there's a lot of work ongoing with the regulator and at the insurance association level that will take the pensions to the next level, especially around auto-enrollment. The auto-enrollment, although it was launched very successfully 3 years ago, actually experienced around more than 70% opt-out rates. That was not intended. So therefore, there are a couple of legislation changes that the regulator is considering to, let's say, to reduce the opt-out rates and maybe even consider possible employer contribution, because these are the key two areas that we lack compared to the successful models, where opt-outs are more difficult and there are employer contributions. So there are discussions whether those could be implemented in Turkey or not, depending on the economic capabilities and the economic conjuncture, of course. But the idea is to make sure that the pensions growth is accelerated, both via reducing opt-outs and maybe employer contributions in the near future. Maybe we can start hearing about those in the coming months.
We have another question from Mehmet Gers. Aksigorta 2020 net income guidance of 0 to 10% is low. Is Aksigorta second half profitability depressed due to some reason?
The first half was quite high. Okay, so since your guidance is only 0 to 10% for the whole year, they are wondering if there's any bad stories in the second half.
Yeah, of course, in the first half net profit, there is a positive impact of COVID, which is extraordinary one-off item, I would say. In the third quarter and the fourth quarter will be normal quarters comparing the COVID period. Of course, we don't know what will happen. New lockdowns, new curfews may impact the underwriting result and net profit towards the year end.
We have another question from Mehmet Ellaltıoğlu. How much growth do you expect in life protection credit-linked gross written premiums in the coming 2-3 years?
Fırat Bey, please.
As I shared earlier, there has been already significant growth over the last couple of years. But to be honest, the economic recovery will be key in future growth of the loan market in general. So it's an automatically bundled product in many cases. Therefore, it's very much related to the growth of the loan market. Having said that, it doesn't mean there are other growth levers. Actually, there are other growth levers, such as different riders that can be added to the products, or improving the penetration rate of this bundled products to the original loans. And there are also improvement areas in terms of customer persistence, etc. So all in all, I believe that the potential for growth is again in excess of 40% in the next 3 or 4 years. But how it can evolve over the next 12 months or so will depend very much on the economic recovery. I would say maybe a bit depressed growth over the next 12 months or so, maybe in excess of, again, 20% or so, but later on a bit accelerated growth.
We have 2 new questions, pretty much in line with each other, from Bülent Şengönül and Mehmet Gers, a follow-up question. How do you see entrance of Türkiye Sigorta into the market in terms of profitability and other competitive dynamics? Do you see any threat on margins? Can it trigger a further consolidation? Mehmet Gers asked again about Türkiye Sigorta merger, change in business and valuation dynamics for the other listed insurance companies, and how?
Well, I'll say a few words and then I'll pass the word to my colleagues. Türkiye Sigorta, we see it as an opportunity. Before we had six competitors, 3 on non-life side, 3 on life side. Now we have only 2. That doesn't mean much maybe, but we see more attention from the state on the insurance sector, which is a big plus, which will help the regulators to bring up new ideas to advance the sector. So we expect a larger pie in the coming years. At the end, competition is good. Our companies have to be better, no doubt about that. We're not directly competing, that's another thing. At least till now, they are more dominant in the bank assurance side. They have, of course, they are collaborating with the 3 state-owned banks, whereas we are mostly on the agency side, and we are distributing with Akbank and with our direct sales force on Aviva's side. Of course, this may bring more competition, but we believe that it will bring more opportunities than threats. Uğur Bey, please.
You summarized very well. Of course, two companies has different strengths. Aksigorta has strengths over Türkiye Sigorta. Türkiye Sigorta has strengths on Aksigorta. But in overall, what we believe that competition is always better and that always keep us alert and to develop and grow more. We don't see any threat. This is an opportunity, at least, to decrease the number of players in the market is one of the opportunities in there. And maybe that may trigger the consolidation in the market after Türkiye Sigorta's entrance to the insurance market.
Well, I agree with all the comments and would like to underline once again that I think this can flare up the competition a bit more. As to, now there is a big player in the marketplace and they have got number 1 position and number 2, number 3, whatever, will aim for number 1 position in many segments. So I think it can flare up the competition in that regard. So I find it rather positive.
We have another question from Hanzade Kılıçkıran. Do you expect any legislation change in health insurance sector, such as this being compulsory for corporates, at least on the social security complementary insurance?
Well, in my presentation, I mentioned that we are expecting some regulation changes on the complementary side. We don't know the details fully, but we are definitely expecting some changes. Do we have any idea on that?
There is no certain changes expected, but definitely, it's one of the sources of budget deficit is health expenditure of the state. And on the coming periods, that expenditure can be shared with insurance companies and the citizens as well. So from that perspective, definitely we should expect some regulation changes which will accelerate the health insurance and the healthcare industry to grow more on the coming period. Yes.
Thank you.
We have a new question from Duygun Kutucu. Recent news reports suggest Aviva is considering Avivasa as a divestment candidate. Could Sabancı be interested in acquiring Aviva's stake in the JV?
Well, Aviva, our partner, we've been great partners since 2007. We have a very well-run company. Yes, I know that they are reviewing that portfolio. They're not reviewing only Turkey. They are reviewing everything, except according to their CEO's announcement, they are reviewing everything except the UK market, Ireland, and Canada. But we don't want to speculate on anything that before a case like that comes up. We will certainly consider all options, I should say. Thank you.
We have a new question, a follow-up question from Mesut Ellialtıoğlu. Do you expect any regulatory change in restricting the life protection products to credit loan products extended by the banks like Akbank, hence lowering life protection product profit margins for Avivasa?
Could you get that, Fırat Bey? Could you please answer?
Yeah, all right. Let me try to answer. First of all, we don't expect any intervention as such. The life insurance is not compulsory against loans, but the banks are strongly recommending insurance to customers who take out the loans, which is absolutely, I think, is right. Because insurance is a product that you cannot obtain once something bad has happened. So therefore, there are millions and millions of loan takers, including mortgage loans and consumer loans. And it's a fact of life that bad things happen, like the accidents, death, etc. Therefore, those loans need protection. Those families, loan takers need protection. So I don't see why there should be a restriction on this. And actually, on the opposite, we are seeing generally, let's say, more favorable terms to customers being offered if they take out an insurance, because the risk of the loans are generally reduced thanks to insurance. That is the market reality.
Any other question?
No more questions right now. We have one question from Saadettin Bağcı. How do you see the competition in property insurance sector after Türkiye Sigorta becoming the largest insurer in this segment?
Property insurer.
Yeah.
Property insurance.
Yeah.
Fire insurance. Well, they may be the largest because of their presence in the bank insurance sector and because of the high rate of mortgages being placed by governments, by state-owned banks. So, as I said earlier, we don't see them as a direct competitor in that channel. That's their captive channel, obviously. Uğur Bey, would you comment on that?
Definitely. When we look at the channel mix of the Türkiye Sigorta, their major channel is bank insurance distribution channel. And in the bank insurance part, they have 50% market share. So particularly any credit provided by state-owned banks definitely will be the captive customer of the Türkiye Sigorta. And depending on the credit volume growth, Türkiye Sigorta may increase the market share on the bank insurance and on the property side. Currently, their market share on the agency and the broker channel is less than their existing fair market share. Of course, they are going. They will want to. They will want to grow on the agency and the broker channel. But of course, in order to grow property line of business, you should have some competencies. Of course, from future, they may gain that competencies, and they have also strong reinsurance partner, Türk Re. When we combine Türkiye Sigorta and Türk Re, definitely Türkiye Sigorta would be one of the big competitors on the property line of business on the coming period.
We don't have any further questions right now.
Okay. Well, in addition to what Uğur Bey said, maybe I can add a few things. Of course, when they are placing a credit, they're bundling it with property insurance. But most of the cases, this is, these customers are having insurance for the first time. So they're helping us creating awareness in the market vis-a-vis insurance. So we're hoping that at the renewal times, this may be an opportunity for us.
To
So
capture
it's
those
good for the market, in fact.
Yes.
Definitely. And for that particular policy, we're not, as I said earlier, we're not competing directly because that's being sold through placed through their own distribution channel. That's the bank branch, their own bank branch. Shall we stop here, Barış Bey?
Yes. We have no further questions. Thank you again for participating in the virtual Financial Services Day. This is our second after the Energy Sector Day we had. And we will continue with further information on industrials, cement, building materials, as well as retail in the upcoming months. And for those of you who have missed the initial part of this discussion, we will be posting this recording in the web, in our website, so you can catch up. Thanks again. You all have a healthy day.